Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. So as you can see, futures are down about 18 to 20 handles on the escalation of what's going on in Ukraine. Lots of people are going to debate how long is it going to take, what can transpire. The fact of the matter is not many people know. But when volatility hits and risk happens, you need to figure out what time frame you trade on and what you can handle. Overseas, most of Europe is down close to 2.5% to 3%, so we need to see if that's a leading indicator for us. Asia is mixed. You have the Nikkei only down about 1.27%, and you have the Shanghai that bucked the trend almost up 1%. So the question for us today is, what level can hold? How do we navigate? Will the upper area hold that held last week in the SPX, or do we follow the DAX's lead and wind up having a gap and go to the downside? So that's what we're going to try and do today to navigate. If you look at the chart here of the SPX, you will see, let's just fast forward to where we are right now. On Friday, we basically had a closing high, meaning we had a huge move starting from last year, the year before, all the way back, closing high. So we are not oversold at all. So if you start buying a little bit early today, it could be a little tricky. So this is what I'm going to look at for the SPX. First of all, this is probably about where we are opening right now, right a little bit below the 8-day and right around support from last week. So that's all we're at right now, is around 1835 to 1840. If this area holds, which I will probably try and test and buy a little against, then we are super strong and we're going to get a lot of the same. If we try and bounce off this area and it does not hold, you could see a quick move down this week to this 1820 area where the 21-day and the 8-day coming together. So this would be support 1 and this would be support 2. So, with that being said, if you want to try and test things, that's how I would do it. And I would probably do a level versus a level. And if you want to talk about different sectors, about clues, on Friday, the high beta names were a little weaker before the market sold off. The bios, which have been a very strong spot, started to break their 8-day. So I talk about the 8-day and the 21-day moving average all the time. And if that happens to break and you're someone who follows that, hopefully you had high level stops, so then you could actually embrace some volatility. So you go first to the IBB and you will see, not the end of the world, but it did break this upper area. So if you trade for momentum and you stay in it as long as the 8-day holds, that was a spot to sell some. So now here's your 21-day. So now watch where the 21-day is and watch where the 50-day is. As far as technology is concerned, it did not. Had a bit of a doji around the 8-day. A little bit of, the action there was a bit difficult. But anyway, with that being said, here is 89.13. That is the prior high. Let's see if this holds. If this holds, very strong. If this doesn't hold, perhaps the 50-day. So really know where the 8, 21, and 50-day is. I would say the 21-day here could be tested today, and then also the prior day low, which is 89.54, which you all know is the red dog reversal. The sector that tried to play a little catch-up, which you could look at today, because in a sea of red, you want to see, do any sectors pull us out and lead us off for our lows, is the financials. Financials, you go to the XLF, you will see here, it tried to break out above the prior resistance and then didn't have enough juice. If you look here, it's in the middle of this middle range. So here is support. You have 21.56. If we were to stay above 21.56, that is very strong. If we don't hold that, we need to see how this bigger support area comes into play, which is 21.40. If you want to take a quick look at two names in there that I would be focusing on, is Bank of America, which tried to get above resistance and couldn't. I think it's somewhere down around 1620-ish. See if that could hold this longer-term support for perhaps an entry. And then I'm going to start paying some attention to Morgan, which started acting better, that poked its head above prior resistance. So on the down open, maybe there's some opportunity. Both moving averages come here around 30.05. I will also, which I do, is look at high beta tech. And some of the strongest names that have been riding their 8-day moving average broke it. So what does that mean? Do you run for the hills? No. But if you trade for active cash flow or using tactics, you lighten up and then you figure it out. And today, we'll see how high beta tech acts within this volatility. So first things first, you go to Google real quickly, Google's been riding this 8-day moving average, just started to bend a little bit below it. The low here is 1206. It's below it now. Let's see how it handles the 21-day moving average at 1190. I think this will be a spot that some people want to test. And if you're not in Google, maybe it's an opportunity here. I'll probably be looking to see if I can get a cute little scalp long versus area if it sees that. Netflix also been a very, very strong stock. We've talked about this trend that's been, riding to the upside, starting to get a little vulnerable. So if it can't get back above 440, I think that we could see 428, which is big support, and that's an area to measure. So we break the 8-day, you look at the 21-day. Now we'll see also if we go from red to green above the prior low. Watch that. As far as Apple's concerned, a decent move going into its shareholders meeting, but nothing really came out of there. So we need to see, does this build at all? So you have Friday's low of 522 or a little bit below that. I would say trade versus 515. If it were to get below, when close below 515, I would say get out of the way for Apple. If we hold in today, maybe it goes from red to green. I will be looking here also to see if I could find some opportunity, as I do not have any Apple now. I actually took a nice day-and-a-half move that some saw on the virtual trade floor. And lastly, in high beta land, let's talk about Amazon. Amazon, ever since breaking above this lower trend line here, it's acting okay. I'm probably not going to emphasize this area, but if you trade Amazon and you're looking for potential, just a potential trade, see if it could stay above this 350. In social media has been very, very active. I've talked recently about the vulnerability. I have such a problem with that word. In Facebook, and it does seem like it broke the 8-day, and so many upgrades last week, couldn't get any traction. Hopefully you reduce some risk in Facebook, and perhaps maybe even have a cute short. Here is where it broke above and couldn't really hold. Lots of red days in the midst of upgrade galore. So with that being said, 67.38 is the prior low. We are below it right now. If we could get down to the 21-day around 66 today, perhaps if you are short, cover a little bit, and then maybe see if there's an opportunity to be long. And if it goes, if it finds support and gets back above Friday's low of 67.38, maybe you try a little RDR. That's another tactic that I'm going to be looking at today. We're going to map out the 21-day and support levels, but if you're caught between levels, you could always see what the 30-minute low is, buy versus that, and then if it gets back above Friday's low, maybe you have a little bit more than just a scalp. It could be a swing trade, especially if today turns out to be a day where we have some strength and not a gap and go to the downside, but we don't know that yet. Other names in social media land, LinkedIn, talked about, remember, selling into that upgrade? Well, that was right here. And if you did that then, after this red dog reversal down here, perhaps today is a buyable opportunity, right? Halfway back down, somewhere around 200. See if you could get a little scalp long, considering it just came in half of this. And if you're not caught in it, you probably have some opportunity. Yelp, very wishy-washy. Tried being involved in this one for a while, and then on Friday, everyone thought it had to go over 100. It tried and somewhat failed, and at this point, I'm out of Yelp also, and you could see, I guess, the 21-day, which is 89.76. That's a pretty important area. If it's down to maybe it tries to go green for a trade scalp there as well. And I think what you have to do, depending on who you are as a trader, is a day like today, you narrow down your focus. Look at all the stocks and see if anything does go green, because the first stocks that go green typically are showing relative strength, and then if the market gets some traction, those are the ones that not only go green, but then have a little extra follow through for alpha. You have a little bit of the security trade going on right now where people are buying bonds, gold is getting some more follow through. If it were me, I probably wouldn't be chasing either one of those right now. If you look at the GLDs, you'll see my focus, and I did a nice strategy this year, was right around here to the long side. And now look where it is. So with that being said, I've been done with this trade anyway. You go here, 129.50 is a level in the GLDs. If it can get above and hold above, I guess we could extend further. Your next peak right here comes into play somewhere around 136. So if you're not in gold and you have to buy it today, just make sure that look where it just came from. And I personally have a hard time buying it up open, especially in something that's been relatively weak on a more multi-year level. So with that being said, just know that 129.50 is an area that it has to hold. If it gaps up and then starts to fade and doesn't hold it, I would avoid. Some people might try and short the GLDs today, saying, okay, it had a nice year or a nice move in 2014. I think this Ukrainian situation is not going to get into, it's not going to escalate more, so it could be that reversal. Anyway, that's my thoughts there. TLTs, also, you look at the start of the year here for bonds. We talk about gaps all the time. This had a nice gap up in the beginning of January, and if this were not to be something that made any sense, it would have failed. What happened here, though, it held and it wound up igniting another move for bonds. So if you look here and trying to figure out what could be next, this is also up. Here's some bigger resistance here. You have 110, you have the 200-day. I also would not be chasing bonds here. If you want to, that's fine. If you look at the TBTs, which is something I do on the other side, look what happened here just to, on this gap side to the downside. Same gap up to ignite a move in the TLTs. You look at this gap to the downside that ignited a move in the TBTs lower. And here, I'm sure the TBTs are lower today. If you're, looking to do something there, just make sure that you're not just getting over emotional, because from where we were in the 80s or even this year in the 70s, if you're going to be puking it out here down at 66, 67, it's probably not the best trade. I like to buy into fear, not sell into it. So, here we are. It's Monday. You're going to see a lot of headlines. I do think what you have to, look out for is if the Russian troops leave the port city that they have now and advance further into the Ukraine. If they advance further into the Ukraine, that's something a bit different. I'm sure volatility could start heating up, and that might pressure the markets more. If it's just contained there, you'll probably hear talk back and forth, and then we'll see what goes on with NATO and with Russia. Everyone's trying to be a political analyst now. Nobody truly knows what's going to happen. So what I want you to do is just do what makes you feel comfortable. Know your levels. We just went over upper support. We went over where the 8 and 21 day is. You know what time frame you're trading. If you're a macro investor, you survived 1987, you survived 9/11, you survived the financial crisis, Syria, the Mayans, you will survive this too. Don't alter your longer term plan because of this situation. But if you trade for cash flow and you trade tactically, you have to have a plan, because if you start buying too early and we see 1820, you might not be able to hold. If you want to be short and you short the open and the open is the bottom, chances are you're not going to be able to hold it. So know your levels, know your plan, know what you want to get out of it. Be in the virtual trading floor. This is the type of day you want to be on the virtual trade floor, where you see everyone talking, discussing ideas, pointing out what relative strength or weakness is, seeing where levels are. You can see when positions come onto my screen. Right now I have 0. I went from 10 plus positions on Friday to flat. So if you were watching me on the virtual trading floor and following, perhaps you're not in this volatility this morning either, and you'll be able to create some opportunities. So make sure you know that there's a lot more than just this. We have a lot of products out there we're launching that we're going to show you and tell you about. But today is the day when between 9:30 and 10:30, I could probably use 10 more thumbs, because we're going to be executing trades fast, as it should be a fast market, and you have a better area to watch if you actually see things come green, listen on the radio, and help you navigate it as a community. Have a great day. I will see you on the virtual trading floor, and I'll try and update you guys as much as possible.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.